Get your free copy of the complete tutorial at www.teachucomp.com/free.
The other current asset account type tracks assets your company expects to use up or convert into cash in the next year. Other current assets might include short-term notes receivable or prepaid expenses. Your inventory account is an example of an other current asset. Let's take a prepaid rent other current asset account as an example. Assume you have signed an agreement to lease a new office space for $1,000 per month. Also assume you needed to make a prepayment of 6 months' worth of rent before you could move into the new office space. If using the accrual accounting method, you must attribute expense to the period it is incurred, not when you actually pay it. So you would not want to simply write a check for the next 6 months' worth of rent and attribute the entire amount to the rent expense account for the month in which you wrote the check, as that will not accurately reflect when the rent expense is actually incurred. Instead, you use the other current asset account of prepaid rent to help show the rent expense as it is actually incurred. To do this, open the Write Checks window when the first payment is due by selecting Banking, then Write Checks from the menu bar. Enter the total amount of the payment, $6,000, and select the landlord as the vendor from the Pay to the Order of drop-down field. On the Expenses tab, select the Prepaid Rent Other Current Asset account. In the adjacent Amount column, enter $5,000. This shows that $5,000 of the $6,000 payment is being traded to another asset account for the prepayment of the rent. Click into the next row in the Expenses tab and select the Rent Expense account. QuickBooks should automatically attribute the remaining $1,000 to that account for the first month of rent as it is being incurred. For the next 5 months after this, you will not write a check for the rent, but rather create a general journal entry that decreases the amount in the Prepaid Rent Other Current Asset account by $1,000 and increases the amount of the Rent Expense account by $1,000 to show the other current asset being used up and show the rent expense being incurred in the correct accounting period.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.